A special rate announcement episode of Canadian Mortgage Weekly. It is April 13th, which means that we're going to hop into some chatter about the rate announcement before we get into it. And of course, this morning we're joined with Joe Bladdock. Joe, how are you doing today?
Sam, it's great to be here today, and I'm really excited about today's rate announcement. It's been a big one for us. We've been getting a lot of questions about it, and it's almost like an exciting event today. So I'm glad to be here, glad to be covering it live with you, and just sharing all the information about this rate announcement and what's led up to today with all our viewers today. So Sam, how about yourself? Are you pumped to be here as well?
Absolutely, yeah. I mean, like you're saying, we have been getting tons of questions. Everybody's seeing that fixed rate been on a pretty steady and steep increase. So I think that in the last while, we have had so many questions about variable rate, fixed rate, what to choose. And I think that especially today that we're getting the monetary policy is going to be really good indicator and give us some feedback of what the Bank of Canada has in store for us as we head out of today's announcement. And as we see that result, we'll also get to see that monetary policy, which it does help us kind of get some insight on what's on Bank of Canada's plate.
Absolutely, it really does. Those monetary policy reports are good nuggets of information. It really shows what the government is truly interested in, and it really communicates to a lot of mortgage and Canadian homeowners what the message is going forward into the next few quarters, just so everyone can get a handle on what the Bank of Canada's attitude is with housing, interest rates, and that's what we're looking for today. So Sam, let's take a look at some of that news that's been leading up today. I know that one of the things we like to do on Canadian Mortgage Weekly, and especially today's episode, is just to go over some of that news. And I know that we've been seeing a lot of articles talking about this rate announcement today.
Yeah, we've seen a lot, and I think most of the news is at least expecting a 1/4% rate hike. I think for the most part, that's been the general consensus that because the Bank of Canada is at a hard spot, with inflation, but also with high house prices. So everything has been more or less up in the air of what the best decision is for the Bank of Canada. But it looks like a lot of news sources, articles we've been seeing are all at least speculating to see a rate hike today.
Absolutely. So and we've been also seeing like some articles even talking about like a potential double rate hike. Instead of a 25 basis point increase, we'd be looking at a 50 basis point increase, which is quite considerable, given just where we are at with the economy. And a lot of people have taken on these larger and bigger mortgages.
Yeah, exactly. I mean, when you look at the fact that the house prices have also been on a steady increase the last, 3 months that we've been reviewing them, that mortgage value and that mortgage amount has been increasing with all of these, new buyers as well.
Yeah. So the bond yield, we've been following that as well, and that's been increasing as well. We've been seeing a lot of it's just been trending upwards since almost since the fall of last year.
Yeah.
And it hasn't really stopped. Currently sitting at 2.58 in that range, right? But a lot of the fixed rates have been based on that, and they've been creeping up ever so slowly, but also consistently and almost on a weekly, daily basis, almost leading up to today's rate announcement.
Exactly. Yeah. I think there's been a number of banks that, we had seen at least going up, once a week. We get that email blast on a Friday that Monday rates are increasing, sometimes even midweek rate increases. So we definitely have seen that fixed rate follow suit with the bond yield.
Absolutely. And the CDOR rate, another metric that we follow on Canadian Mortgage Weekly, which simply talks about the spread between variable and fixed, and if it's still a good option. I know we talked about in the past that variable has been higher than a fixed rate before, but right now the variable is quite lower than the fixed, and the CDOR rate is still showing that the variable is a good option.
Yeah, exactly. The variance between the two, it does show that it is a good option. I mean, especially if you're just looking cut and dry at what the variable rate is, as to what we've seen the fixed rates be, increase to even at the start of this week. It definitely is still a indicating that it's a good option to go variable.
Absolutely. So let's look at some of the articles that and what they've been saying. I know that we've talked a little bit about that 25, 50 basis point rate hike. Maybe we don't have time to get into the article specifically today, but maybe we'll cover them off at the end of this episode if we do get some traction or some interest. But pretty resounding consensus that the Bank of Canada almost needs to raise rates because of inflationary concerns, and the economy is just doing really well with jobs and everything out there at the moment.
Exactly. Yeah, I think that has been the general consensus that a rate hike is due at this rate announcement, and it is following suit. I remember looking at the rate announcements and the Bank of Canada policy in the fall and winter last year, and they were saying the cycle was supposed to increase this spring. So it looks like they were are almost sort of keeping on track with their original plan at the end of 2021. And again, as we mentioned, we had seen clients are in that state of curiosity of knowing, wanting to know what's happening, where the fixed rate's going to be going, where we'll see that variable, and what's a good option. So I think that a lot of clients are unsure, but again, I think there's been a lot more questioning about, going variable as we've seen these fixed rates hit some pretty high rate amounts.
Absolutely. Yes, you're absolutely correct. As these fixed rates have gone up, the variable mortgages have become quite more attractive in terms of cost, which we'll cover off in just a moment. But also, taking a variable rate mortgage right now would be almost a different kind of bet at this point, because you are saving quite a bit of money up front by taking that variable right now, even if there's a further rate hike down the road. But yes, looking at the last time there was a rate increase, that was just a few months ago. We're looking at March. We had a 25 basis point increase, and that was actually the first rate increase since 2018. So everyone has this in their mind right now. The rates have just increased. Everyone's seeing this on their statements that their payments are increasing. So increasing the rates today would be hard for Canadians to handle, but almost a necessary measure for the Bank of Canada to keep inflationary measures under control. Let's look at what other websites are reporting. I know we looked at Mortgage Dashboard this morning. What's their prediction of a rate hike today?
Yes, so they release a percent chance of a rate hike, and I think when I checked it right before we went live, they're sitting at about 200% chance of a rate hike increase. Again, from Mortgage Dashboard. So it looks like they're pretty bought into a rate hike being pretty imminent.
Yeah. Okay, so that also is signaling a rate hike. A lot of signals toward a rate hike today. Let's take a look at how many rate hikes it would take to meet the current fixed rate. So if each rate hike was a standard rate hike of 25 basis points, we would take approximately 8 rate hikes to meet today's fixed rate, which is quite a lot of rate hikes. We've never seen that many rate hikes in Canada in a short amount of time, within say 12 months. But it is possible, and that is what it's going to take. And the payment difference between those two mortgages right now, we took a look at that earlier, Sam, and that was quite drastic. We were looking at just a 25-year mortgage based on the average home price for a first-time buyer in Canada, taking an insured mortgage. And then if they were to take a variable rate mortgage, the difference in monthly payment comparatively to a fixed would be just over $700 a month.
That's quite a lot. That's really
quite a lot. So in a way, we can look at this by the variable and the fixed being $700 extra in interest just for the security to have your payment not move. However, I almost think that is a more risky bet, because you are volunteering that interest to the bank up front, whereas the variable, you're taking a lower payment up front And you could just take that extra $700 and plop it on your principal until the rates go up.
Yeah,
It's a different way of
exactly.
looking at it. Yeah.
Yeah, like you're saying, it's a different way to look at it, because I think most people again assume that because the fixed rate has standard payments, there's less risk involved. But I think you're bringing up a good point that, when the variance is that high and there's a difference of 700 that's going directly to interest, that premium almost makes it a worse choice, right? When you consider the savings, or like you're saying, that prepayment privileges, maybe lump sum right onto the principal. If you went with the variable rate and had that extra $700 a month is quite a lot for a lot of people.
It is quite a lot. So taking the fixed rate is almost a more risky bet in that sense by volunteering that interest up front to the bank. Obviously, every client's going to have their own risk tolerance, and I always want our clients to reach out to Sam, myself, or Terry Lynn to get started on a consultation as to whether fixed or variable is right for you. Let's take a look at some of the items that will happen, some of the occurrences that will happen if rates do change, Sam, and then we'll get right into this rate announcement. I think they have released it, so I think we can get right into it. So notable items, if rates do change, if they go up, or down, then those with variable rate mortgages, home equity lines of credit, variable rate car loans, unsecured lines of credit, variable rate credit cards, your minimum payment will go up, unfortunately, and that will be based on interest. And if rates go down, then rates will tend to also push your minimum payment lower. Now, if rates go up 25 basis points today, that will be approximately a $100 increase on the average priced home mortgage. And if it goes up double, which is the supersized rate hike, 50 basis points, we're looking at a $209 increase for the average variable rate mortgage. But still, out of that $700, you're still paying $491 extra in interest comparatively to the variable rate mortgage. So Sam, have they released the information yet?
They have released the new overnight rate.
What are we looking at, Sam? I'm really excited to hear this because, we got our first rate hike since 2018, just a few months ago. It was a standard 25 basis point rate hike. What are we looking at today?
Today we're looking at another increase of 50 basis points. They went with the supersized rate increase for this week.
So the media was right this time around. So we did go with the supersized rate hike. Okay, so let's talk about what this means today for Canadians. Supersized rate hike. So that will be on an average priced home with an average for a first-time home buyer mortgage, looking at an increase for variable mortgage of around $209 a month. Still lower than the overall fixed rate mortgage payment. And the result is going to essentially change variable rate mortgage rates, variable home equity lines of credit rates, credit cards, as well as car loans, and the way the interest is calculated on all those products. And I know that they've released the monetary policy report. So let's just take a quick look at that and see if we can point out any things on that quickly. If not, then what we'll do is we'll follow up with a full rundown on that on our next Canadian Mortgage Weekly episode here. So I'll just try to bring that up here. Looks like there are some mentions about Russia's ongoing invasion of Ukraine. Spikes in oil, gas, and other commodities. And these are pushing inflationary outlooks in Canada.
Right.
Yeah. Canada is still forecasting growth, looks like, into 2024 of around 2.5% to 3.5%, which is not too bad. A lot of talk about tight labor markets and strong economy. Wow, the CPI inflation rate in Canada is 5.7%. I think that might be the highest inflationary rate that we've seen in over 20 years.
Yeah, it's definitely high.
I saw and read an article about that just a few days ago. I can't remember if it's a US article or Canadian article. So for my viewers, I apologize for for misquoting it if it's not correct, but I think it's the highest inflationary rate we've seen in 20 years. So these rate hikes will be a good thing towards combating that inflation and bringing that back down, so we don't have this runaway inflation in Canada, which is something that a lot of Canadians and a lot of our clients are concerned about.
Yeah, that's right.
Yeah. All right. So what we'll do is, as we continue to follow up on this rate announcements on Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast, we'll touch base on this tomorrow during our live episode. And Sam and I will go over the monetary policy in a little bit further detail. Looks like Canada wants to maintain their target inflation rate of around 2%. With it being around over 5% right now, we're drastically off track. So we'll have to really bring that back in line. So with this supersized rate hike, I imagine this will really put some, really shake up the economy and change some things up a bit. Sam, what do you think about that?
Yeah, I think that this is definitely setting a precedent with a increase in the rate hike. Going with a double. Again, as we had chatted about before, there was an article that we had seen where this might also indicate a slowing of rate hikes as the year continues, so that it doesn't get to a point where the overnight rate gets too high that it's almost unachievable or unattainable. So that'll be an interesting point to note as we move forward, that they doubled down with a point or a 50 basis point increase. We'll see what the rest of the year has in store if we start to see, whether the variable rate will kind of hang at this rate or if they'll push it even further and get us with another rate hike.
Sounds good. Thank you very much, Sam, for that commentary. And Sam, always good to have you on our show. I know we've been doing these rate announcements for quite some time now. And with today's rate announcement, you've been no stranger to it. So Sam, just to let everyone know about who Sam is, he's a mortgage professional in the Barrie area, working with the Mega Mortgage team, closely with myself and Terry Lynn. Sam, always good to have you on the show. Originally, you were from Ottawa. You've been with us for over 2 years now. It's good to have you on the show. Thanks for being here today.
Yeah, thanks so much for having me. It was definitely an exciting episode to be a part of, and the Bank of Canada didn't disappoint. We had some great news to cover. And of course, Joe, you've been in the industry for over 11 years, so you know way more of the statistics than I do of where rates have been. Living up in Aurelia with your wife and 2 kids. It's awesome to be on the video with you this morning. And yeah, check out our video tomorrow morning when we go into Canadian Mortgage Weekly and cover off the new first home tax-free savings account that's been gotten the green light from the government. So that'll be an exciting episode for tomorrow.
Yeah, I'm really looking forward to that one. The new first home savings account. This has been a first-time home buyer tool that has been talked about in the works now. It seems like it's been in the works forever, maybe like a year or two.
Yeah.
But it's finally got the green light, like you're saying. So we'll be talking all about the information that we've heard about next episode, which is tomorrow. We'll give you the rundown on the account, and hopefully this will be one of those new tools that first-time homebuyers can use to really get in the market a little bit easier. Because as you know, Sam, that's been really difficult for first-time buyers. So as we get into April, we'll be spotlighting first-time homebuyers and trying to really provide some good information to all our clients that way this month.
Mm-hmm.
All right. Well, thanks for watching, everyone. Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast with Sam Thompson and myself, Joe Bladdock. We hope to see you next time. Tomorrow's episode will be at 11:30 a.m. Eastern Standard Time here on Canadian Mortgage Weekly, talking about the FHSA. And we'll see you then.